That's with the panelists, though.
And test, test, test. 1, 2, 3. Testing, testing. 1, 2, 3. Check, check, check. Test, test, test. 1, 2, 3. Okay.
Okay. It's not working.
Test, test, test. 1, 2, 3. Loud and clear. Okay.
You hear this?
Starting in a couple of minutes, everyone, just to let you know. And if you want to chat in, just where you are tuning in. Starting in a couple of minutes, everyone, just to let you know. And if you want to chat in, just where you are tuning in. For the minutes, everyone, just to let you know. And if you want to chat in, just where you are tuning in. For the minutes, everyone, just to let you know. And if you want to chat in, just where you are tuning in. For the minutes, everyone, just to let you know. Okay, we'll see if we can get rid of the. Trying to get rid of the sound there. Try to get rid of the feedback. Everybody's tuning in, getting an echo. How's the echo now?
Sounds as if there's a rusty bolt in the background.
How's the echo now?
I wonder if it's coming from me.
Rusty bolt in the background.
I have YouTube open. Okay, I'm going to close YouTube. Okay, is that any better on sound? Trouble is I can't tell now.
Sound's gone away, Stan.
The sound's gone away?
Yeah, there was a sound in the background like a rusty bolt being tightened.
Okay, but it's all good now? Okay.
All clear now apart from your voice.
Okay, I had to close out of my YouTube, I guess, and somehow that was a problem. Okay, well, listen, we're having some sound issues this morning, and I'm going to ask Joey to just hang around in the background a little bit because Margaret was having trouble hearing just on GoToWebinar. She's able to, we were able to hear her quite fine. So I think we're going to be okay, but like I said to Margaret, this is kind of like live TV. Things can go wrong. So we'll do our best. Thank you, everyone, for chatting in where you're from, and I really appreciate that. It's great to hear from you. Thank you so much for joining us. Again, this is Stan Heller, broadcasting from my home office in Lethbridge, Alberta. So it is definitely not a studio office. It is my home office, and I hope you can hear me okay. It's wonderful to have you here. We love these international forums with people from all over North America, Europe, and other countries joining in and kind of asking questions, chatting in the YouTube chat box. That's one of the nice features about being on YouTube. We encourage you to chat away there. So again, welcome everyone. And I think we'll get started officially. I know people are still coming into the webinar, and that's fine, but we'll get going. Again, it's Stan Heller from Lethbridge, Alberta, VectorVest consultant for Canada. So great to have you all with us. And we should be all underway. I'm sure I'll get a message if you're not hearing me okay. So for some reason, I had to close out of my YouTube, but I'll try getting back in later on. Well, listen, we are going to be discussing some stock ideas and market analysis. So there is risk in investing, and you should be aware that everything you will see and hear today is provided for educational purposes only, should never be considered investment advice, and the information is designed to empower you to make your own investment decisions using our wonderful VectorVest tools, and these decisions are yours and yours alone to make. All right, and with that, just be aware, here is the agenda for today. We're going to do a quick color guard review. I'll do the markets around the world, and then Dr. David Paul, our VectorVest UK Managing Director, will come on and speak more particularly about the US and the UK markets. And so we'll get some excellent guidance there, as we have every month recently. So that's wonderful. And then I'm very excited to have Margaret Bell back as our keynote speaker, Tweaking Your Trading Picture. Margaret has been a forum presenter in the past, and her presentations are just so always well received, and sort of common sense type of approach to trading. And we look forward to hearing from Margaret a little bit later on. And we'll make sure, again, the recording will be available shortly after the webinar, and actually it will be available right at this YouTube location. So you can come back to YouTube, 2 hours from now and listen to the whole thing again, and you can pause it and stop it and rewind and that sort of thing. I did want to let you know Margaret has some outstanding searches coming up, and the Pro Trader plugin module is something that she uses extensively to get the technical information or analysis into her searches. So VectorVest was kind enough to offer a forum Pro Trader special. You can try it out for 30 days at no cost, and then just diarize it, because after the 30 days, if you decide to continue, you don't have to do anything. It'll be set up to be a $3.95 US charge. But if you want to cancel, you just go ahead and cancel. So you would get $100 off of the regular price, and then you can do the Pro Trader searches yourself, and there's a lot more. There's 30 pre-built Pro Trader searches that you can use, and that link is just at vectorvest.com/forum Pro Trader. So we'll remind you about that at the end once you see the searches that Margaret has put together for you. All right, right to the color guard. Kind of a mixed bag here, if you will. In Canada, up at the top left, I mean, we've had a terrific run already from January until now. We're up 10.41% year to date. So I hope many of you, or most of you, if not all of you, have participated in that nice rally. There have been some pullbacks, but pullbacks in a bull market like we've had is really a nice opportunity. We kind of look forward to those because they present a nice opportunity for getting back in. And that's kind of what happened here on Friday. We had a three primary wave down days. And then Friday, we had a really strong up day with a green light ending up in the price column. The RT rose a point, and the buy-sell ratio indicating the breadth of the rally was up quite strongly as well. So we do see a lot of mixed colors, a lot of yellow, which is neutral, suggesting caution. But when there's an opportunity, take advantage of it. Be an optimist, as Dr. Toledo likes to say. Take advantage of it, and play small ball in terms of the number of shares you buy, the number of positions you hold, and your stop criteria should always be in place when you buy. But other than that, it's we're back to a primer wave up, and we've still got the long-term confirmed up call. On the US side, 11.69 year to date, and similar story there. Friday was a really big up day. The NASDAQ, which had been kind of pulling the market down a little bit, rallied strongly, so the tech stocks rallied. We got the primary wave up signal again, and look at the buy-sell ratio up quite strongly on Friday, and we're in that confirmed up call as well. Now, Australia is a little bit of a different picture. We've got a little bit more of the red lights in the color guard near the most recent dates here, and we did still stay in that primary wave down. And in the strategy section for Australia, VectorVest wrote price, RT, the buy-sell ratio, and MTI are all lower over the last 5 trading days. If the market continues lower, we could receive a preliminary signal of a sustainable downtrend on Monday, as early as Monday. That doesn't necessarily mean a confirmed down call, but it would just be another primary wave down and looking to make that move toward the confirmed down call. And the UK up 7.07, and Dr. Paul will go into this in more detail, but you can see the color guard. Most recently, a lot of yellow, a couple of green lights, still in a long-term uptrend, but we've gone from primary wave up to primary wave down to primary wave up. And VectorVest said the RT buy-sell ratio and MTI are painting a foggy picture this week. As the RT remained unchanged, the buy-sell ratio moved higher and the MTI finished lower. And they concluded it seems the bulls and the bears are duking it out, so the color guard becomes especially important. On the European market, a really strong day on Friday as well. You can see that here. The MTI is at fairly lofty levels. We've had a lot more green than red over the last 13 days. Still a lot of yellow in here. And VectorVest in the strategy section again wrote, well, RT finished the week higher, both the MTI and buy-sell ratio and lower. The bearish divergence between the price of the VectorVest composite for Europe and 2 of our market timing indicators continues to suggest that downside risk outweighs upside potential. So caution is advised, but if the futures are up and you've got a stock that's setting up in a really ideal setup, then go ahead, but play small ball, just as I mentioned before. And I'm sorry I can't see the chat box, but I hope everybody's having a good picture of what's going on here in the global markets and paying attention to the color guards. All right, and just for Canada then, the market timing as of yesterday, you can see that energy and a volatile tech sector overcame losses, but the key market timing indicators are still painting a foggy picture in Canada. RT and MTI remained basically unchanged, although the buy-sell ratio picked up gains. And so we need to keep our eyes on the color guard going forward. In the market timing graph, using the green light buyer signals in the triangles, you can see anytime we had a pullback in this channel, this bullish uptrend channel, it's been a really good time to add to your positions or buy new shares. Just again, at the long end of the channel, you kind of want to be a little bit more cautious, but we're just kind of going sideways the last couple of weeks, gravitating between primary wave up and primary wave down, but we are seeing green lights in the color guard, and those are buying opportunities. There is this bearish divergence with the MTI still hitting lower highs, but they did pull up this last week. We can see that. Okay. And so bottom line, be optimistic. This is a little bit of a pullback. Hasn't come all the way down to the 65-day moving average, which is kind of right behind this trend line. But it's a little bit of a pullback, and the Friday candle showing really strong buying pressure. So be ready on Monday to participate, and we'll show you where to look for those stocks. So in terms of the emotional market cycle, whoops, you can see the MTI is at 1.08 in Canada. So we're either in this, we're in this trending market, no question, between sort of 0.80 and 1.3. That's the trending phase of the market. Typically dividend payers, long-term positions are doing well in this kind of a market phase. And you can look at it like we're rising, which we are, but you can also look over here, and if we keep falling, then we're going to have these emotions come to bear as well. Similarly, for the US side, Last month at the meeting, we were at 1.32 for the MTI. We're currently at 1.16, so we're actually on the downhill side of the MTI emotional market cycle. So a little bit of caution warranted, but again, we're above 1 with the MTI, and that's a good trending phase of the market. And I received a really nice note from Mike Simonato. You might recall he presented on long-term investing to the February International Online Forum. And the note said, "I finally finished my deck and stayed within my $800 budget." And here it is. And isn't that about the truth? This is about $800 worth of lumber right here. So that was pretty funny and worth sharing. But underlying is the bigger picture from another subscriber, Doug, who sent me this note saying he thought the group might appreciate this heads up. It's US based, but I think we're seeing similar in Canada. Investors have to earn a pretty large return to beat this beast. And he said the 3/4 inch plywood for his neighbor cost $100 a sheet. And here you can see lumber costs are up about 265%. This is an analyst and fund manager. And so he put this list together, and then it kind of dovetails with the VectorVest market climate that you see below, where inflation, if you look over to the right, back in January, inflation was already bearish because these are on the VectorVest 0 to 2 scale over here at the right. These are the actual numbers at the left. And it's kind of gotten worse with the inflation percent increasing and the Commodity Research Bureau index worsening from 173 to 206. And you can see the numbers are worsening here on the CRB inflation. They were already bad on the CPI, and they continue to be weak for the market. So the issue is, with this inflation rising, the Fed is likely, some analysts have said, to raise interest rates to control the inflation. And some analysts have openly expressed frustration that they haven't done it already. And then rising inflation and interest rates are the enemies of the stock market. So if this is going to continue, it could lead to a correction at some point. And summer months are typically not good for the stock market overall. We need to watch that color guard very closely. Listen to the enhanced color guard reports nightly on the U.S. market. We all have access. And pay attention to those daily color guard reports. So be optimistic, but there's also a word of caution in here. But overall, I'm more optimistic than I am cautious for myself. And then on our global ETFs year to date, they continue to move strongly in the funds here, or the countries here at the left. And on the right, these are the ones that have moved up since our last meeting in April 9th. And Brazil, Russia, Poland, Spain, UPRO, the S&P 500, 3 times leveraged, strong here as it is over here. So it gives you an idea of where some of the strength is in the market. Notice this yield fund. It's a wisdom tree, basically a dividend yield fund. And it's performing extremely well. And that makes sense because we are in that trending phase of the market predominantly. And a couple of my essays I just wanted to share quickly. The Seller's Remorse. Just you can read it when you get the slides, probably tomorrow. Tomorrow morning you'll get the slides. You can take a look if you haven't already. Or you can go to VectorVest Canada, because everybody has access, and have a look. But it's kind of just a reminder that sometimes we sell too soon, and seller's remorse is when we push that sell order and immediately think you made a mistake, and then when the stock turns around and starts to climb higher and higher, you really feel a lot of remorse about that decision. Sometimes you make that decision without following your rules, And having rules, as I note here, is the best way to avoid seller's remorse. And then Jerry D'Ambrosio is doing 4 presentations next week, 2 on May 12th, 2 on May 13th, how to know when to sell. So good opportunity to get some pointers there, and he'll talk about the new course that's coming up, VectorVest.com/sell. And then yesterday I wrote about, we are in this trending phase of the market. Retirees are looking for income, and the dividend yields are really strong, and we just need to be sure we're buying stocks that haven't been reducing their dividend and that have made at least modest gains in the market over the last couple of years or so, or I used 104 weeks. So this is a quick search to get you there. And again, the keys to success, you just got to be optimistic. Vaccine rollouts are a huge success, so that's a positive. The cash relief on the U.S. side was positive for the market, despite that horrendous jobs report yesterday. It was only horrendous because it missed expectations by such a wide margin. There was certainly a nice gain in jobs, but more stimulus is planned, and if that happens, that could be very bullish as well. And then look for those pullbacks as opportunities, not an excuse to sell without having your stop losses in place. And use that top-down approach. Glenn Tompkins gave another wonderful presentation on the top-down approach, sectors to industries to stocks, in yesterday's strategy of the week, and we talked about it in last month's forum as well. And and then focus on the stocks with the best potential, the best technical setups. So I showed the graph setup for those dividend payers with earnings per share and the dividends shown in the subgraph. And you can see First National, almost every stock had this COVID collapse, so that's kind of unavoidable. But the key is, how well did they recover, and are they still going? And so this one is certainly doing that. And you can see a 4.01 dividend yield as of yesterday. And Power Corp in Canada, so these are the Canadian side, another one, 4.88, and excellent earnings now. Sun Life, pretty steady earnings all the way through, 3.32 dividend yield. And the banks are all doing extremely well. Banks, REITs, the building wood products, especially the ones that pay dividends, they're all doing great. Okay, so something to watch for sure. So with that, I'm going to close, and there may be questions, and I'll look through the chat when I'm able to open up the YouTube channel. But just now I want to turn it over to Dr. David Paul for an analysis of the US and UK market. So thanks everyone, and I'll look forward to your questions and comments in the chat. Hopefully you like what you see and click on the like button, and I'll just turn it over to Dr. Paul here in 1 second. So David, I'm going to make you the presenter, and you'll have to accept that. If I clicked on the right, there we go. All right, and I see your screen, David. And you may have to unmute yourself, I'm not sure.
Hi, Stan. Can you hear me all right there?
I hear you just fine, and I'll go and have a look at the YouTube chat and make sure they can hear you there. I'm sure Joey will let me know if we can't hear you, but it sounds really good to me, David. You're all set. Thank you so much for giving us your time.
No, it's a great pleasure to be here, Stan. Good afternoon, everyone. Well, good afternoon from very wet and windy West London. So it's been a bit of a wet and windy week on markets as well. So let's get stuck in. I don't want to take up too much of Margaret's time. So I'm starting with the UK market, and that's the front page of VectorVest UK. And as Stan says, the primary wave was down for 3 or 4 days. It turned up, back up yesterday. And we've got a green light in the buy-sell column of the color guard. So the color guard is mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. The underlying trend is up. It's been up for a long time, and we've had a confirmed call up since the 11th of November. So let's just look at the chart, and that's the VectorVest composite, and the red and the green triangles are the longest term measure of the trend on VectorVest, the confirmed calls. And I think you would agree that it's done a really, really great job in ignoring the noise and keeping us in the bigger picture. The green line study below the price is the buy-sell ratio, and the blue is the proprietary market timing indicator. So we've got a confirmed up in place. The market, as you can see, I hope you can see, broke this high. That's the pre-COVID high. And then it went back and tested that high twice. Those of you that know my work will know that I favor, from a lot of experience, too much experience, that a double bottom after a nice run is a really, really strong signal. And in fact, a double bottom after a run is a much stronger double bottom in terms of hit rate than a double bottom which actually predicts a reversal. So that we moved up quite nicely, and we're pushing up again. And we'll see. Look at this second little double bottom in a moment. As you can see, although the price is moving up, the buy-sell ratio is falling. Now, many people that I've presented this to have said that this huge level in the buy-sell ratio that happened in January is a function of the deal with the EU, and that's probably correct, where there's a great deal of euphoria. Nevertheless, very dangerous words are "this time is different." This is rising, and the buy-sell ratio is falling. However, folks, it looks as if it wants to break out of that little trend line, and that's a very positive development that happened on Friday. We blow this up and have a little look at the last 6 months. There's the last confirmed up in the 11th of November. And again, that wasn't an easy signal to take. Maybe a bit easier than last April, but that's when we were going into our second lockdown, if you remember, folks. So as I always keep reminding people, when it's time to buy, you won't want to, okay? So the next time you're getting into a position that seems quite easy to get in, there's a good there's a good chance you're getting in at the wrong time. The good trade is always the hard trade, okay? And when I mean good, the hard trade, I don't mean that it's intellectually difficult. It's just emotionally difficult to get in. And that was the case way back in November, certainly. As you can see, that's the double bottom that tested the February high. And now we've charted another double bottom, in fact, that's come back and kissed this high. So there's no, what technicians refer to as overlap, and that's very good indeed. So a push up here would be very strong. And it seems to have broken this little trend line. Trend lines and indicators, folks, are actually more powerful than trend lines on prices. So those of you that are technicians that use MACDs and RSIs, frequently a trend line breakout of an RSI or a MACD or any indicator gives you a heads up and tells you what's happening before the price. So that's something you can play with. I'm reasonably positive here. The market's come an awful long way, I know. I've been asked 1,000 times in the last week about sell in May and go away. It's not a part of my plan, and I'm just going to, in fact, hold my position. So in the UK, I'm fully invested, and I show that portfolio. Nothing much has changed in the last few months. and I'll discuss that portfolio Monday afternoon to the UK people or anybody who wants to come along on Monday afternoon at 1:30 UK time. So that looks quite good to me. There's the DEW, and the DEW is positive since the first week or two of March. And as you can see, it closed below the moving average that defines the DEW, but the DPO managed to stay well above its center line. And it's a shorter term measure of the trend than the MTI, or measure of momentum. And as you can see, the price here was rising and the DEW was rising, and that normally means more trend. And I am reasonably positive, folks, in both sides of the pond, that we've got a little bit further to move in this into the heel end of May. But as Stan says, market's come an awful long way. The seasonality is not great. So any change in the trend as measured by a confirmed call has to be taken very seriously indeed. Now we move to the American market. The American market, those of you that follow the different indices on the American market will know that they're all saying different things. Hopefully they're going to move into unison this week. So we had the Dow making new highs, and during the course of the week, the NASDAQ went down below its 50-day moving average. The S&P, which is made up of both types of stocks, work from home, new economy stocks, and old economy stocks, getting pulled apart in the middle. We had Yellen talking about putting up rates during the course of the week, which caused the market to sell off. And then, of course, we had numbers that missed. The PPI numbers all missed. PMI numbers all missed, should I say. And clearly that huge miss yesterday, expectations. Bloomberg analysts were forecasting 900,000 new jobs and 250, 260 pitched up. And clearly that the market would have said that there's less chance that they're going to put interest rates up in that environment. Stan put up that graphic from Charlie Belo about commodity prices, and it's always really, really easy to put up those graphics after the damn things have run 100%, but the trick is to try and get in at the turning point, and all commodities are broken up. Pretty much everything you can think of is at 10-year highs. So that inflation, I believe, will come sooner or later, and we need to prepare mentally for that. That's the VectorVest US composite. As you can see, the confirmed calls have been an awful lot noisier here than the UK market. Remember, folks, they're constructed in quite a different way, in that in the UK we use the MTI, and in the US they use the buy-sell ratio. As you can see, in this push-up over the last month or two, the buy-sell ratio just hasn't been able to come to the party at all. And we can see as this generally drove up, the old MTI has been making falling tops. So that, in fact, is not positive. Nevertheless, the market is slugging its way up. And if we have a look at it, it's respecting these levels, and it moved up very, very strongly on Friday off these levels. I say again, I think we're going to see a decent run here, but we have to be very careful. If we were to get a confirmed call down, if you get a confirmed call down, then in my trading plan, here's what I'm going to do. And I can't, your trading plan is yours, but in my trading plan, I'm clearly not going to buy any more. 2, I'm going to watch the stops that I've got very carefully indeed. And 3, I'm actually going to look at the portfolio and have a look at shares that have done absolutely nothing in the last little while. If they haven't made any money for me on the way up, then there's precious little chance of the buggers making any money for me on the way down. And I'm thinking of Cranswick. Keith from Taunton, if you're listening, why are we still holding Cranswick? What can you do? hopefully the sausages, it's a meat producer, everyone, makes darn good sausages. So that is the DEW. It's up as well. Again, market respecting these levels. That's the S&P, which I know every hook and cranny of because I trade it actively for a living, and I've been trading it more aggressively over the last year now, I suppose, than I've done in many a long day because I've got more time. I'm not going around the country to our groups. Somebody got a sniff of this on Thursday with that bad number, okay? Somebody got a sniff of something because it went right down, ran the stops, and then it turned on the sixpence. Those of you that are intraday traders, if you have a look at the 30-minute chart, there's a classic spring down on the 30-minute chart, and it turned on a sixpence. Calvin, if you're listening from Wales, it turned on an exact 78% retracement of the 30-minute range. So this to me has got a target. My target, the first target is 4277, and I wouldn't be at all surprised to see it stagger around 4250, and then we'll get a consolidation again. But to me, there's more here. And I spoke about this on Thursday to a group of our people online. That's 2, that's 3, and I think there's 5 to come here. That's a little ABC. I don't count Elliott waves way back to Lord knows when, but if I see 5 waves, I'm always excited. I've got 6 spread bets running. Well, I had 6 spread bets running in the US. Horton's has been great, and that's a spring entry there. And I know, folks, that I'm a bit of a one-trick pony, but that one trick has fed and watered me for a very long time. Pulled back to that old high, went up, couldn't make a new high, at least it couldn't close up there. Okay, it came back. I thought it was going to fill me here, and then it came right down here, nailed the stops, reverse. So that's my entry point, and it's been great. That's Horton. See that outside day on the way up? And I've taken off half, and I'm still running half up. And that really, when the trade works well, you regret taking off half, but it doesn't always work well, as I'll show you in a second. That's Nucor. Now, Nucor, I found for the Midas Touch watch list, and I keep my eye on that Midas Touch watch list. It's a great, great source of swing trades for me. And I didn't have the greatest of entry because, although it looks obvious now, there's the spring, there's the first test up, couldn't make a new high, goes down, runs the stops. I thought it was going to pull back to that level. And I had an order in there, and as you know, I can frequently be a dick for a tick because I missed the entry there, but I managed to get into it up here as it broke that high. Sometimes you get punished, i.e. as soon as you get in there, it goes back, runs the stops one more time. But every now and then, as my dear grandfather used to say, the blind pig will discover the corn. So that one moved very nicely my way. And again, I think you should review that strategy of the week by Glenn, because this is a part of a very strong group at the moment. So if you get the market right, if you get the DEW is up, there's got a confirmed call up. For my swing trades, I use the DEW primarily. And if you get the sector right and the share is looking good, well, you've ranked an awful lot of stuff at your back. So if you haven't listened to Glenn on that top-down approach, folks, I think that's going to make you an awful lot of money, that little 15, 20-minute video of his. So that's AMAT, another spring, into it from there, and took off half, and then it's pulled back into another spring. So I actually back to full size on Friday. I bought it at 132. So stop loss for both positions is under this low. This is a better looking spring than that one. That was quite an ugly agricultural spring, but this is a beauty. We'll see if the beauty works. looks very pretty, but will it fight, as they say? So I'm looking for a push in AMAT. Now, 6 trades. I had upstart, and on upstart, I made as much as I risked, got my stop loss up to entry, and was stopped out on Thursday. In Lulu, I made as much as I risked, and it came back and stopped me out pretty much at the low of the day. Okay, so I got out exactly where I should have been buying in, but that's, what can we do? So I made tiny profit on upstart, a tiny profit on Lulu, and apps I got stopped out for the second time in a row with the full position. So so 6 trades, 3 going, 2 making really good money, 2 small wins, no losses, and 2 losses. So that's pretty much it. Now, folks, I brought the euro dollar up, and I have to run here. This is a monthly chart since 2000. I don't want to upset Americans listening, but folks, it looks to me as if the dollar wants to weaken markedly. Now, this is a monthly chart. I know every nook and cranny of this bugger because I traded it for years. 5 waves up and this 3 back. Again, Carolyn, if you're listening, that's 78% of that. I thought that this was going to pull back more here. I thought it was going to pull back to here, and it seems to want to go again. So it looks to me, and this is a monthly chart, for God's sake, don't go out and sell the dollar on Monday morning. We're looking at a monthly view here. But it looks to me as if the dollar needs to weaken, and weaken pretty significantly, up maybe towards 1.3 against the euro. And that is going to be good for this fellow and all commodities. So gold broke on Friday and Thursday, should I say. That's the 62% retracement of this, which was a confluence to that old high. Now, these markets are always easy in hindsight. Now, if gold works, that same analyst will be writing out gold's up 200% next year. But that's no blessed good. You've got to get into them at the turn to make some money, or at least within the turn. So I'm quite positive about gold here. Nevertheless, it has a propensity to disappoint like nothing else on the planet. So just be very careful indeed. And I have one gold stock called Polymetal. And yesterday afternoon, probably impulsively, or yesterday sometime, I bought into another one. I've got the chart in a minute. Now, that's the prize, folks. Now, that's since 2011. That's a monthly chart. And we see this huge cup and handle. And we got this handle that's in fact playing out. So for those of you that are watching gold, there's no need to stress. There's absolutely no need to stress, because if this does break, it's going to take many, many months and years to actually make a decent move. But if you see a couple of closes above that obvious handle, then I think even the most conservative people should in fact consider a gold stock. Silver, that's Pan-African Resources. And that's the setup. It's a setup that I've favored over the years. Again, it came back to a 62% retracement. Now, this is a penny stock, folks. A small little mine in the most gorgeous countryside called the Eastern Transvaal. It's actually called Mpumalanga these days. Just a drop-dead part of the world. Beautiful place. I know the mine exceptionally well. I could take you underground there if you wanted. It's pulled back in 3 waves, and that wave are exactly the same. And that pattern was made famous by a chap called Harold McKinley Gartley in a book he wrote in 1933. And the pattern is known by the name the Gartley 222. Because my good friend Larry Pesabetis found the Gartley pattern on page 222 of Gartley's book. And any of you that are interested, on Monday afternoon at 12:30 American time, 5:30 UK time, I'm on Larry's show, tfnn.com. So I'll be presenting VectorVest on his show on Monday afternoon. So Pan-African Resources is good. Silver looks to me, if it's going, I'm not strong on silver because my history in this is on the Johannesburg Stock Exchange, and I haven't got a great deal. There wasn't a great deal of silver opportunity, but there's plenty on the London market and in the Canadian market, Stan, I believe. Again, we get this double bottom after a thrust, very strong. Again, that level is 78% of the last run up, 1, 2, 3, 4, and 5. And this pullback to here is going. Is it going to break? I don't know. But if you take this handle and you add it, you get a huge target here. All right. So silver, if it goes, has got a big target. We don't know what's going to happen next, folks. Always easy to write out that the thing's up 300 or 400% after it's done it. That doesn't make us any blessed money. That's platinum. And I've been pushing on platinum in the UK work. We've got one little stock, again, a South African stock that I know so well called Sylvania Platinum. And it's, for most VectorVest users, it's up 3 or 4x now. And I've personally added to it a couple of times along the way. This could take a bit of energy to break through this high. Some other, many of our customers have also got a little mine called Jubilee on the platinum markets. And then, of course, there's the big one, Impalas and Anglo-Plats. But platinum looking very strong indeed after a huge bear market. That's copper. Now, the poor UK people have been listening to me rattling on about copper for a year now. And I got interested in it, and I spoke about it here, in fact, at that breakout. Copper has absolutely soared. Goldman Sachs have said that copper is the new oil, and that always worries me because sometimes Goldman Sachs saying that the thing is going to go up is a curse of death. But this has gone a long way, folks, and I don't know if there's more legs in it or not. All I know technically is that should repeat, and if that's the case, we're right at the end of that. So I don't know, and there are claims, this is the exchange traded fund, but many people are saying that there's enough. I think there's an awful lot more legs in copper. And I think we'll find a very strong correlation between the stock market and copper, and certainly on oil as well. So as long as the stock market hangs in there, this will probably hang in there. Sooner or later, we're going to get a pullback on this. And this will be the first wave, that'll be the second, and then the big wave will really move. Okay, so I'm very optimistic in this, but just remember these are cyclical and these are huge cycles. That's 16 to 20 there, so huge cycles. That's my vehicle of choice. It's a BlackRock investment trust, and it's got all the usual suspects in there. That's the only investment trust I've ever bought. One of our customers who's really strong in exchange-traded funds in Edinburgh, Neil, tells me that there's an exchange-traded fund that would do it cheaper, with cheaper costs. But that's been very, very kind to me. Oil, well, oil is pushing on this top. One of our subscribers in London, Ed Jones, who's been at this game a very long time, tells me that there's a great deal of supply up around here. So he believes that that's going to hold at 68, 67, he said. I think, Ed, if I'm quoting you correctly. So it's going to take an awful lot of energy to get through these levels. Okay, it's due a decent pullback. And that little run up looked quite corrective. In fact, I was tempted to short it a week or two ago, but I haven't done anything. So oil looks good. Clearly, the oil mining oil companies are going to make a heap of money up around those levels, and there's quite a few oil companies in the Midas Touch watch list, folks. So steady as she goes. Commodities have had a great run. The news about commodities is everywhere. It's certainly not a hard trade anymore. The trade is looking increasingly crowded, but it's probably got legs still. I think the stock market should be good in May, but it's come a long way, and the seasonality is against it at this time. If the American market moving up on very low breadth, and as you know, Dr. Lito calls that buy-sell ratio the canary for its ability to predict the future, and it's saying that you shouldn't be going on long fishing trips. You should be watching and watching carefully. You need to decide which market timing system you're using. We can't do that for you. If you're a longer-term investor, you're using confirmed calls. Then watch for the confirmed call. I've just told you what I'm going to do if a confirmed call should happen, but you need to think through what you're going to do. Okay. If you're a swing trader like me in the American market, I'm a long-term trader, trying to be a long-term trader in the UK market. I'm a swing trader in the American market with 5-to-1 leverage at the moment, and I use the DEW in the American market. If that keels over, then I won't be opening any new long positions. I haven't shorted the American market on a spread bet as yet in this era that I've been in the American market. Sooner or later, that'll come along. So I'm probably going on far too long. Those of you that want to come along on Monday afternoon, it's 8:30, I think, American time. If you want an invite, david.paul@vectorvest.com. It'll be a great pleasure to welcome you along. Stan, I'm all out of air.
All right. Well, thank you so much, David. Wonderful guidance once again. Very much appreciate it. Boy, we need some more likes in the like box there in the YouTube, but very well done. Some great guidance there. Appreciated your comments on gold. I managed to sneak in a couple of positions on gold last week, maybe a little bit early, but then all of a sudden Oceana Gold went up about 18% in a day and just came out of its doldrums, so that was all good, and I think there's some more to go there. So we will see. Really appreciate it. Love your expression, blind pig will discover the corn, as I did on Oceana Gold. So there you go. Thanks very much,
guys.
David. And looks like a lot of folks are following your guidance, so that's awesome. Now what I'm going to do, I'm going to turn it right over to Margaret. I just need to do a couple of things here, I think, before I do. And I just want to mention Margaret is a great friend to VectorVest. She's given 2 presentations to our VectorVest program already. And it's been very well received. So that's great. I'm going to take back the controls here, and then I'm going to give them to Margaret. So I think I need to take them back. Let's see. Yeah, okay. All right. Show my screen. Let's see if that pops up on your screen. Yes, it did. Yay. I'm sorry for the technical glitches today. I don't know. We have lots of rehearsals and everything works great in the rehearsals, and then I push the wrong button and things change. So I don't know. But anyway, I think we're going to be fine. And again, and Margaret presented in March the Finger 4 formation graph setup, which is pretty fantastic. Again, just looking for that ideal setup. And today she's going to speak about tweaking your trading picture. So very excited to hear Margaret. I'm going to turn it over to her right now. And we will see how it goes.
See if that pops up on your screen. Yes, it did. Yay. I'm sorry for the technical glitches today. I don't know. We have lots of rehearsals and everything works great in the rehearsals, and then I push the wrong button and things change. So I don't know. But anyway, I think we're going to be fine. And again, Margaret presented in March the Finger 4 formation graph setup, which is pretty fantastic. Again, just looking for that ideal setup. And today she's going to speak about tweaking your trading picture. So very excited to hear Margaret. I'm going to turn it over to her right now.
Okay.
Screen.
Can you hear me, Stan?
See if that pops up on your screen. Yes, it did. Yay. I'm sorry for the technical
man.
glitches today. I don't know. We have lots of rehearsals and everything works great in the rehearsals, and then I push the wrong button and things change. So I don't know. But anyway, I think we're going to be fine. And again, Margaret presented in March the finger 4 formation graph setup, which is pretty fantastic. Again, just looking for that ideal setup. Today she's going to speak about tweaking trading pictures. So very excited to hear Margaret. I'm going to turn it over to her right now.
Okay. Can you hear me, Stan?
Screen.
Can you hear me, Stan?
See if that pops up on your screen. Yes, it did. Yay. I'm sorry for the technical glitches today. I don't know. We have lots of rehearsals and everything works great in the rehearsals, and then I push the wrong button and things change. So I don't know. But anyway, I think we're going to be fine. And again, Margaret presented in March the finger 4 formation graph setup, which is pretty fantastic. Again, just looking for that ideal setup. Today she's going to speak about tweaking trading pictures. So very excited to hear Margaret. I'm going to turn it over to her right now.
Okay. Can you hear me, Stan?
Screen.
My goodness.
Okay. Well, I guess I'll go ahead here. Thanks, Stan. So for disclosure, there is no best trading or investing method. There is only the best one for you. The one that you make money with because you did the work to find the edge. So you're all hearing me now? Okay, good. So this is an updated Finger 4 presentation. I did present about 3 years ago. Finger 4 is a simple visual system based, and it's based on daily charts and short-term swing trading. I want to say a big thank you to VectorVest for excellent software and support. And sorry for all the confusion today, but we'll get through this presentation together. Dan, want to send a big shout out to you. One of the most important things in my trading life is my trader friends, and there's just lots of sharing and discussion. And even though everyone trades differently, there's always so much to learn from each other. I use 4 trading indicators, the 5, 8, and 13 EMAs, and I used to trade on the 3 and 8, and Stan was the one that introduced me to the 5, 8, and 13, and it's made a difference in my system. I use the ADX, trend strength indicator, the MACD, convergence, divergence oscillator, relative timing, which I like to have above 1 and moving up. 2021, I've added additional indicators, the value, earnings per share, 50 moving average, 200 moving average, and the volume. And I trade daily candlesticks, and I'm a trader. So here's my description of moving averages, and it's compiled by quite a few people that I absolutely respect in our industry. The 5-day EMA, Steve Burns considers that strong momentum. So as long as your price action is above that 5 EMA, you're in an uptrend. The 8-day EMA is a short-term trend, also considered the T-line, and it was introduced by Rick Sadler of Hit and Run Candlesticks, and that's how Stephen Bigelow uses for support in the candlestick forum. The 13 EMA is a sell signal crossover, and Stan introduced that with his 5, 8, 13, where the 5 closes below the 13 EMA. The 20 is your pullback support. The 50-day SMA is your uptrend defense line. 100 is a big price dip. And the 200 moving average is actually considered your last stand in an uptrend or downtrend. And I actually don't purchase stocks anymore that are trading under the 200 moving average. A quote from Steve Burns, bad things happen under the 200, including bankruptcy. So my trading has really turned around since I just quit. I just quit trading under the 200 moving average. caveat on that, though, and we've been talking about gold here this morning, is when an entire industry has been under the 200 and moving up. You've got lots of good companies with excellent earnings and excellent potential moving up from under the 200, and we'll see a lot of that if gold moves up. Indicators. I have a pretty simple thought process when it comes to indicators. The 5, 8, 13, 20 EMA, squeeze breakout, where they all come together and then they break out, forming a spray, moving up or moving down. The ADX, my visual process is the green crossing above the red is a buy signal, red crossing above the green is a sell signal. The strength of the crossover is considered when I'm looking at my charts. And one thing that I've really found is the positive continuation of the ADX confirms a continued uptrend. And that's, I'll explain that more when I show you some graphs. MACD turning positive, green above the red is a buy signal. Turning negative, red above the green is a sell signal. Strength of crossover is considered as well, how big that move is, and timing above 1 and moving up. And I love this quote from Steve Burns. Overthinking is a weakness few people recognize in themselves. Simple principles executed with discipline is where the magic really happens. If you're a technical trader, be a technical trader. When you see something on your chart, but then you're pulling in opinions from here and there and everywhere else, it affects your technical trading. So if you're going to be a technical trader, be one. Don't overthink it. Go with your charts. My trading routine, I hope everybody's got their own trading routine set up because it is important. First thing I do in the morning is I determine market direction, and that's pretty simple. Turn on CNN pre-market and find out which way the market's going to go for the day or for the start of the day. I'm going to review my AM watch list. I'm going to review my current holdings and sell any failed positions. And what I mean by that is those are the ones that I'm confirming from the day before. So I've made the decision the day before if I'm going to sell based on the opening in the morning. Throughout the day, I'm going to run my searches, the 5, 8, 13, 20, finger 4, channel breakouts, and I'm going to be sharing those searches with you today. I'm going to create watch lists for stocks that meet the formation. I'll share with you today how I'm going to set up my watch lists. At the end of the day, I'm going to review my watch list. VST stocks will be at the top. If potential for purchase, I'm going to review the 1 and 3 year charts, noting the history, the prior support and resistance, they're in uptrends or downtrends, and how they've acted over the years. I'm going to determine if I'm going to purchase at the end of the day, and that's when I do the vast majority of my buys is at the end of the day, or if I'm going to set up an AM buy order or wait for tomorrow's opening and buy manually. I'm going to purchase stocks. If I'm going to purchase the stocks, I'm going to add them to my portfolio at the end of the day, or I'm going to put them on my morning watch list. That's my trading routine. I hope you have yours set up. My graph set up with VectorVest, candlesticks. I use volume, of course, the ADX. The ADX, I don't use the ADX and ADXR. I strictly use the DI and DR, and you'll see that when you see my graphs. MACD, relative timing, all my EMAs are listed there, support and resistance, earnings per share, value, and I use a 6-month graph is what I use when I'm moving through. This presentation is based on using 2 screens, and you'll see what I mean when I'm doing my watch lists. Here's are my rules. I'm going to buy on a full or breaking up spray formation. The 5, 8, 13, 20 are moving up together. On a major up, I'm going to wait for the next day confirmation. A lot of times they'll come back down a little bit and give me a better opportunity to buy them. I'm going to buy on 4 formation positive, 5, 8, 13, 20, the ADX, MACD, and the relative timing. I'm going to confirm my average volume, noting volatility. I like to see higher volume going into my buys. I'm going to confirm support, resistance, and trends on a 1 or 3 year period prior to purchase. And my sell rules, I'm going to sell on any 2 formation breakdown, or if the 5 EMA crosses the 13 EMA, as Stan pointed out, or I'm going to sell on any confirmed major candlestick down signal. So a shooting star, engulfing, harami, hanging man, evening star, or kicker. If you haven't taken any courses on candlesticks, I highly recommend it. And I think that VectorVest is doing some courses strictly on candlesticks. It makes a difference when you're trading. It's candlesticks are the psychology of trading, I think. And you add them with moving averages, and it really makes a difference in your trading. After 20% profit, consider taking profit or put on a trailing stop. But if you're sitting above that 5 EMA, just let it run until a candlestick or a crossover takes you out. Downtrending market, I'm going to short on high volume over 1 million average daily shares. And of course, that's going to be a reverse spray. And I like to put them on a watch list and short on an up day rather than when they're just heading down, because I don't want to be caught in a covering. So well, as the least amount of risk that I can put on in a short is what I'm going to do. I'm going to confirm support, resistance, and trends on a 1 and 3 year purchase as well. I'll buy to cover on any 2 formation breakup or confirmed major candlestick reversal signals, like a hammer, inverted hammer, engulfing, harami, kicker, morning star. They can really show the bottom of a trend, and you can get a turnaround really fast. Again, I'll consider 20% profit or set up a trailing stop. I really don't do a whole bunch of shorting. I tend to go more with inverse ETFs if the market's in a downtrend. A few additional rules, 10 full positions, trading average daily volume of over 500,000 US and 250 for Canada. Half positions, less than 250 shares, average volume daily, or less than $5 per share. The maximum position that I'll put on in one company is 15%. I trade both in Canada and the US, and sometimes I'm actually in the same stock, both in Canada and the United States. So I want to make sure that it's absolutely not above 15% of my total portfolio. And further charting rules, confirming support, resistance, and trends on the 1 and 3 year charts. I have some trading thoughts that I keep at the top of my mind every day. And we all have issues with trading and things that challenge us. And so I read through these often, just so that I'm following my rules, confident in what I'm doing. So I use end of day candles only for analysis. And if I'm at the computer for too long during the day, I can tend to flip to intraday charts, and it can affect my decisions. So I know that's one of my problems. So my mind is focused on using end of day candles only for analysis. Stay positive. I've lost a lot of money over the years anticipating a downtrend that never happened. So Stan was just talking about staying positive with what we're doing. You have to risk open profits if you want huge wins. So as long as you're riding that 5 EMA and you don't have a sell signal, you want to stay in that trade. Profitable traders play the long game. Day trading can be mostly break even, and I did do day trading for about a year after I retired. And man, it's a tough market out there. It's just so much easier and so much more relaxed to have a good system where you can just sleep comfortably at night. The big money comes from holding on to your winners. Don't sell something just to sell it. And here's a big one. Keep your losses small. Always know where you're going to get out of a trade before you even get into it. Set your safety trade. And that's one thing about finger 4. As you'll see, I'm looking to get in as close to a move up as I can. So if a stock turns against me, I'm out really quick. And confidence in trading is not, I will be right about this trade. Confidence, or I'm 100% sure. Confidence is I'll be fine if I'm wrong and I stop out for a small loss. I can take lots of small losses and I'm good with it. The market doesn't always work in my direction. But those big winners are going to make up for all those little losses. So don't be afraid to get out if the market turns against you. And trading is tough, not because the charts are hard to read, but because the mind is almost impossible to control. So let's go over my watch lists. I created these on May the 3rd, and I'll show you how to set them up in VectorVest. So we're going to go to a new group. And if I can get that working, there we go. So we set up a new group. And the reason I'm setting up this new group in my Unisearch is because I want to collect all the daily searches that we're going to be using. I'm going to call my new search, my new group, my daily watch list, and I'm going to click add. It's going to show up as my daily watch list. And that's what we're going to add our daily searches to. So I'm going through and I'm going to run my first search. And as you can see, I'll run finger 4, 5, 8, 13. I've ran my search, and now I'm going to graph them all. So now we're going to go through and we're going to start looking at each chart individually. I'm just going to show you the first one. This is the first one that caught my attention, Jack. And you can see on my charting, here's finger 4, I can see immediately that this is an undervalued chart. The value is higher than the price. I can see that we've got a breakout above a channel, resistance line here. It's been running in a nice channel. I can see that there's higher volume on that day. I can see the ADX has turned positive. Again, green over red. MACD has turned positive, green over red. Relative timing and the earnings per share are all good. So that's all I'm looking for. I'm looking for that right-hand side of the chart. So I'm going to go through and I'm going to review all these charts. And as I'm reviewing the charts, I'm holding down the control key and I'm right-clicking on the ones that I want to keep as I'm reviewing the chart in my separate screen. And after I've reviewed all the charts, I'm going to hold the control key down, right-click, and select Add to Watch List. I'm going to add them to my daily watch list, and I'm going to choose today's date. That date that I chose was May the 3rd, and I'm going to click Add, and now I've added all those stocks to my daily watch list. So now what I'm going to do is I'm going to go through and I'm going to do lots of other searches for the day. The second search I did was the AD and MACD crossover, and I actually liked all 3 of the stocks that were here. So again, I'm going to right-click, I'm going to add them to my watch list. They joined in with the May 3rd, click OK. And one thing you can do when you're doing your searches is the searches show up with VSD at the top. I like to change and redo the search again using the dollar change. And what that does is that brings up the high end, the high value stocks to the top, and review those charts as well. And if you're in a retirement account, your higher end stocks will be brought up in this search. So now I've done multiple searches. I've combined all the stocks that interest me for the day. So this watch list can get to be very, very long some days. On great days, I can 30 or 40 charts. So closer to the end of the day, I want to review these charts once again. So what I'm going to do is I'm literally going to open them up and I'm going to review them as I did before. And I'm going to right-click on the stocks that are really high end and the ones that I'm ready to commit to buying. And I'm going to add them to a watch list. So I'm going to use a control key and right-click. I'm going to create a new watch list under my daily watch lists. And this time I'm going to add an A or 1 after the date. So it shows up as my second sort or my second search of the day. So now I'm coming into the end of the day and I only have 3 stocks that I'm looking at purchasing at the end of the day. So I can make my decision within a half an hour at the end of the day. I'm going to either purchase them then or set a limit order for the following morning. But at least I'm only looking at 3 stocks now, not 30 at the end of the day to make decisions. So that's how I narrow things down. And then seeing we've gone to all the trouble of making these daily watch lists, and I keep them all, right, for a certain period of time, is I like to look back on prior days and see how I did as far as choosing stocks and how I did following my rules choosing stocks. So I'm going to take you back to the Canadian search on April 29th and compare it with how these choices would have done by May 5th, the day that I presented, or that I was preparing these slides. I'm also looking at whether I'm following my rules and how I've done on choosing these selections. So what I'm going to do, choose April 29th. I'm going to go up to Quick Test All. I'm going to choose my date, the start date of April 29th, and closing on May the 4th. And checking my results, I see that I have 9 stocks, 6 are winners, 3 are losers, right up there. And this is such a great way to see how your system works. I got to thank Gord Nixon from Kelowna. He worked with me on, tried to back test Finger 4 so many times. But because we have so many stock rules based on candlesticks and the searches, there's no one search that really pulls everything together. It's hard to back test. So what we came up with was doing quick tests and going back and literally reviewing your daily searches. But this here in 4 days was up 2.75%, which would have given us 200% annual return. That's pretty wild. And please ignore this CBR comparison. I didn't mean to have that there. So we'll move on to chart setups. And I think it's important to just focus on making one good trade at a time, especially if you're a new trader. One good trade at a time. Let's look at HZO. I purchased HZO on this date, on this breakout. You can see Finger 4, it's an undervalued stock. I like to have my earnings date on my charts simply because I like to see how the earnings were accepted by the market in the past. So the earnings broke out. We're above the 200. We've got higher volume than normal. We've got the ADX positive. We've got the MACD turning positive. Our relative timing has moved above 1, and our earnings per share have been moving up. So that is a Finger 4 buy system. It's totally visual, easy to see, easy to understand. I don't change my charts anymore at all. I know Stan loves using the guppy. Everybody has their own visual picture of how they like to chart. This is just mine. Here's IIIN in the steel industry. Again, undervalued. Earnings per share broke out that day, or earnings was reported that day. We had a breakout from a channel, great volume, ADX crossing, MACD crossing, relative timing, earnings per share all moving up. If we move back and we look at the previous history of IIIN, you can see there was a buy here, breakout, breakout, moving up in volume. You would have kept in this stock because nothing went negative. And you can see by the ADX, this is something with the ADX that I really pay attention to, is its spread. As long as you've got this nice spread, you're in an uptrend. You can sleep at night. Unless things start turning around as they did up here. This is where the candlesticks come in. So this candlestick is a hanging man. And that hanging man was confirmed the next day. So that opened my eyes up to say, oh, this stock could be turning down. And if you followed it down, we did get the crossover here and the ADX crossed over. You would have still made money had you waited for the crossover, but not as much as what you would have had you known your candlesticks and got out when that hanging man formed and was confirmed. Here's Big Five Sporting Goods, and I got to do a big shout out to Sandy for picking this in our trading group for the month of May. I think in a week she was up over 58%. That's a pretty good run. So you can see here the buy date when it actually showed up as a buy in my system, and my dance card was full, so I couldn't purchase any. But undervalued. We've got a nice move up over the 200. The volume was okay, nothing changing there. But we did have the ADX crossover. We had the MACD crossover. Relative timing is above 1, and earnings per share is moving up. So way to go, Sandy. That was a beautiful buy, and you could have been set up in this days before that breakout. Flowers is another one. We had a nice crossover. Undervalued stock. The earnings per share came out that day. We had a gap up and a nice spread moving over the 200. Strong volume, ADX crossing, MACD crossing, relative timing, earnings per share. I hope you can really see the visual effect here, and that you can move through these stocks really, really quick. Or sorry, move through the graphs. Here's a home building company, and I've only got one more after this one. Again, undervalued, breaking out, ADX crossing, MACD crossing, relative timing, earnings per share. You can see how long you just stay relaxed in this trade. You've got a nice fan out of the 4 moving averages. The 20 is keeping you in there really nicely. It's like just holding you up. And the ADX is open. The MACD can get a little skinny at times. It can turn a little bit negative, but as long as the MACD is holding up and you're above that 5 EMA, there's no crossing. You just stay. The last chart I'll show you is the industrial average. And again, sometimes with the primary wave, you get down days, up days, down days, and it moves you around a little bit and you think, should I be in, should I be out? If you're always looking at the same picture, you know where you want to be. So with the industrial average, I can see that I'm in a major channel, but I can also see that the ADX is positive, not coming together. From what I'm looking at, this uptrend's fully in place. It's not moving down at all. I'm very comfortable with the market right now. So let's create a new search, and we might as well use what VectorVest has already started for you. So you don't have to be intimidated about doing searches in VectorVest. They have so many excellent searches set up. ProTrader is required. And Dan did have a special on the ProTrader, so I think that's great. $100 off. I couldn't do without ProTrader, and to do any of these searches, it is required. So first thing I'm going to do is I'm going to change my default up here to alphabetical. I'm going to adjust the ADX and MACD killer crossover. So we select it, and then we do time of search, stocks, we select price volume, and price split adjusted. ProTrader and moving average. And then the 50-day moving average is currently, and has been for the past 3 days, above the 200-day moving average. So what I'm telling this sort to do now is I only want to see anything above the 200-day moving average. I'm going to click OK. Another thing I want to do on this search is I want to change the 10ADX has crossed in the past 2 days above 20. So this was originally set as 40. I want to change it to 20. I'm going to click OK. And I'm going to enter the name of my search, which is the ADX 200 moving average. And I want to save it under my long searches. And then I can run the search. So, and it's tweaked to my trading plan. So now it's going to bring back searches that are over that 200-day moving average. So I am going to share with you some of the searches that I use, and I do use quite a few of them. Again, that is why I haven't been able to backtest this finger 4. But if you set it up so you can find the perfect search for finger 4, please share. So here's some of my searches. Of course, the finger 4, 5, 8, 13. This is the one Stan had set up. All I did was I added the 50-day moving average is above the 200. Finger 4, the MACD. This is one that I've used for a long time. And the MACD is my signal on this one. Gap out of a channel. This is a wonderful search. It's one of my favorite. It has the best potential, I think, of all of them. MACD and killer crossover. The SAM and DPO killer crossover. Again, look these up alphabetically in VectorVest, and you can set the system up yourself. One-day price delta. This shows what's moving for the day. It does pull a lot of charts out for me. Again, above the 200-day moving average. But it's going to show you what stocks are really moving during the day. And that's one of the ones that I use first thing in the morning. So the best trading strategy is the one we believe in and can trade with discipline over the long term and not be psychologically uncomfortable or stressed out all the time while doing it. So make your trading strategy your own and then focus. Follow one course until successful. And that's what I've done with finger 4, and I keep tweaking it just to make it better. I get better returns, and it makes my trading life just very easy. I'm not looking for opinions. I'm focusing in on my technical trading. So there's so many options for trading. Choose where you want to be and focus. Set up your trading plan, set up your rules, and then trade your plan. And I really like this cartoon. I'll finish with it. Top traders, we think for ourselves. If we didn't think for ourselves, we'd be handing our money over to a broker and let them invest for us. But we think for ourselves. And we really don't care when others disagree with us because we have our own systems that we trust. We can trade safely through chaos because we do have a trading plan. We know when to pull some money off the table and sit in cash. We're always willing to learn. We don't participate in market debates because we've traded long enough that we know that we have no idea really where the market's going to go. We just trade what the market gives us. And we cut our losses quickly. There's nothing that can drag you down emotionally more than holding on to a losing position. It affects how you think about your winning positions. So know where you're going to get in, know where you're going to get out before you even get into a stock, and then cut your losses quickly. It's not, if you followed your rules, you've done the right thing, but the market just didn't work on that trade. So just cut your losses quickly and get out, and your whole attitude will remain positive. Traders' opinions match price action. The only stocks I really like are the stocks that are going up. Trade small if you're running into trouble. Oops. Trade small if you're running into trouble, and have confidence. Have confidence in yourself. And the big one is never quit. 95% of stock traders do end up quitting. Don't quit. Trade smaller. Build confidence in yourself and build your trading plan to match your picture. And I think that's it, Stan.
That was just awesome, Margaret. Can you hear me by any chance? we had some trouble earlier on where Margaret could speak and we could hear, but we could not. She could not hear us, and I think that's still the case. So I'm going to take back the controls.
Jen, did you take over?
Yeah, I'm going to take the controls here, and let's see if this works. Okay, and from current slide. All right, I think I got it. All right, there we go. All right, well, what a terrific presentation. I'm just reading the chat, and Mark said, what an excellent presentation. And Bob Smelt says, great job. Great presentation. Mark Yao says, excellent presentation. It's just so nice that people are commenting, Margaret, that they're able to see an actual routine from one of our subscribers who's doing well in the market and has a systematic approach. Love your graph setup, and a few people chatted in that they like it better than the Guppy, which I showed at the Financial Freedom Summit. And gosh, it is a terrific chart setup.
If you're running into trouble.
Oops, sorry, Margaret, I do hear you, but there we go. So I love the way that setup works. It's finding great stocks early in the run to the upside, and I really like that. The ADX, someone commented how they love the ADX, and so that's a nice addition, and just really great comments. So, and somebody asked, and I was going to ask Margaret, it's sorry again for the sound issues we're having here. Listen, I'll say to you that I've been pushing all the right buttons, and still we've got some glitches here and there. And it just, I don't know, it's something to do with GoToWebinar and anything else that I'm using. I just can't figure it out. But anyway, maybe it's my age. I don't know. But one of the questions that Eugene asked that I thought was a really good one, and it was, where do you typically place your stop loss? And Margaret kind of did cover it, where she did mention that she keeps her losses small. So she's got a great setup. And if it doesn't go her way right away, she can cut her losses at an extremely small level. Yeah, thank you for those of you that are saying it's all good. We do try hard. And Heidi says it was a super presentation overall. Yeah, and DF says great stuff. I set up the same kind of system, but look for that RT cross as the starting point. So RT crossing above 1 is a pretty good indicator just on its own. So listen, there's people asking for the slides, and many of you are on my contact list. If you've attended our past forums and you have received the slides from me, you're going to get the slides tomorrow. The recording is archived right here on YouTube, so you can come back an hour from now and watch the whole thing again and pause and advance and fast forward, all of that. So Norm, this is perfect for you. An hour from now, you'll be able to come into the same VectorVest channel and view the recording all over again. I put up the slide with the Pro Trader. Margaret searches make extensive use of the Pro Trader add-on module, and you can see the effectiveness of it in reducing the number of stocks that she needs to study. And so it's just vectorvest.com/forum Pro Trader. You can give it a try for 30 days. And I would say, make sure you diarize it. And if at the end of 30 days, just call in and cancel if it's not making you money. And otherwise, you'll have $100 savings. This is US dollars. It's normally $4.95 US dollars. So you save $100. Okay. So again, send me an email if you haven't received slides from me in the past. I do know that we've been having some issues where whenever I do a group email, sometimes people don't get the email. It gets returned to me, and there's just nothing I can do about it. I don't know why it does that, but I definitely want to make sure I get this off to you. Okay. All right. And those of you that are brand new to VectorVest and you like what you've seen here today, yeah, I just have to comment here. Marty chatted in. I have been using the Finger 4 for years, and it's excellent. And so Marty, when Margaret first presented this, set up the graph for that Finger 4, and now Margaret has modified it with the 5/8/13 EMA squeeze. And by the way, on the guppy, that's one thing that some of you might like to simplify your graph a little bit. For the trader EMAs, just use the 5/8/13. It'll simplify it, and it really looks nice and clean and works really good. Jim says, wow, I have a lot more work to do. It was great. Well, click the like button, you guys. We're at, they really popped up since Margaret came on and David, and we'd love to see more likes and share. That grows our VectorVest nation. And as I started to say, if you're brand new to VectorVest, you can try it out for 30 days. Just call our support team, 1-888-658-7638. That'll work out really well. We'd love to have you on board with us. And finally, these are the international numbers. It's always so great to have the international audience here. We absolutely love that. So, and thank you, Paul. It says, thank you, Stan, David, and Margaret. Definitely time well spent this morning. That's pretty cool. All right. Well, listen, I want to say thank you so much to Margaret and David. I know they worked so hard again on their presentations and had such an impact on our subscribers and just delivering tremendous information and guidance. So look forward to the email. I should have them out later this afternoon or tomorrow morning at the latest. I do them in several groups, so it takes quite a while to get them out. I kind of schedule them to go every 30 minutes or so. And so don't start emailing me right away if you don't have the slides in the next hour or so, because it ain't going to happen. All right. I need another coffee for one thing. But listen, thanks everyone. Really love it. Glenn, great to have you with us just down the road from me in Medicine Hat. And always appreciate seeing you on these webinars. So thanks everyone. Really appreciate it. And have a great rest of your day.